Hi, I'm Chip Hanlon, and I heard Jerry Slusiewicz was up here earlier today recording a video with Jim Slagle, executive editor of Green Faucet, and since we're in the same building, I thought I would run up and do the same thing myself. Nice to have you here, Jerry.
Hey, thanks, Chip. Thanks for having me.
You couldn't just bring a spare shirt to make it look like this was a totally different session?
You know, I should take it off, maybe.
All right, that's fine. Now, this is a lot of men between the two of us to fit us in the screen. Do you have us in the screen here?
Be closer together.
Yeah, okay, so this is close enough, trust me. Okay, so
Stop grabbing my knee.
Yeah, well, that's private. Whatever's below the camera is private. Okay, Jerry, you've been heavily in cash.
Yeah.
And this is actually interesting because most people, if they were in cash ahead of this huge sell-off the last 60 days, would be happy with that. But you're finding that actually investors are a little bit frustrated. You run a big private client business. Talk to us a little bit about investor response.
Well, again, it's kind of funny. I mean, you know, it's the old adage that when you're right, it's their idea, and when you're wrong, it's your idea. And it's one of these things where I've been heavily in cash since about late June and 100% cash flow over the last 5 or 6 weeks. Now, granted, I could have shorted the market and done better. I could have bought in CDs and got a better rate of return than the money market, even though we switched into the government money markets about a week or so back. But, you know, dealing with private clients is always an interesting phenomenon in the fact that they really are always worried about, you know, the worst possible case as opposed to what you're really doing for them, which is protecting their money. And I've been all about protection of capital, and we've done a good job of that, carrying 100% cash through this last couple of weeks of volatility.
You have done a good job about that. And for the record, when the way we run it at Delta Global is when it's a good idea, it's mine, and when it's a bad idea, it's Pento's.
I didn't say that, Michael, but I can see where that could happen.
Well, I mean, it's obviously anyone who knows Pento realizes that. It's nice to have Zorro as a backup, but listen, let's be honest. What do you think about this? I was a little shy to come up here and do this, impromptu interview myself, but I figured if Don Lusk can go on CNBC with a T-shirt and a jacket, I can too. What do you think?
I don't think you're very shy at all, though. I mean, anyone who knows you, Chip, knows that you're very outspoken, very forward, and the last thing that people would say about you would be shy. So I think that looks good. I like the look. It all works together. I don't know if we get the forward, the bottom, but he's got some shorts on underneath here.
Shorts and flip-flops in Southern California. So you say forward, you act like I've been hitting on you, but let's move on. Okay, so listen. So when are you going to deploy some of that cash back into the market?
Well, I'll tell you, I'm kind of waiting for this whole thing to settle. Whether or not they're going to settle this big bailout, this last tranche of the $700 billion that they call it, which is probably closer to $1 trillion when the Democrats really put on all their earmarks and all the different things they're going to have to add to it in terms of bailing out the homeowners, etc. This is in addition to the $200 billion for Fannie and Freddie, and the $80 billion for AIG, and the $30 billion for Bear Stearns. It really adds up to closer to about $2 trillion. And the real deal is that if that happens, it's going to be very inflationary because they got to print all this money. And so I would deploy it in the oil and gas, gold, and those type of things. If, in fact, it doesn't work out, where they don't bail this out, I see that as still being a deflationary environment. Because the situation is houses are trading at 4 times annual earnings to 5 times annual earnings, as opposed to 3 times, which is the record for annual earnings.
Let me cut in. You give me these Smarties. No, well, you did. You said these were all mine, but I'll give you both the last 2.
Thank you.
I didn't know if they were in the screenshot or not, but I couldn't hold out anymore. Smarties are delicious. So listen.
We had lunch before this.
Okay, so wait a second. You've got cash. You went into the whole yada yada about home prices stuff, but here's what I want to know. When are you going to deploy cash? I mean, at some point, isn't risk-taking going to be rewarded? Stocks have been hammered.
Absolutely.
And isn't this thing going to get passed? And don't you want to buy stocks before it's passed?
Not really, because we have to see what the final deal is. Is that it's going to be heavily inflationary if it gets passed. So you would want to buy the gold and the oil. And I'm not saying I won't buy beforehand. I might buy beforehand. But the reason the market went up on Thursday and Friday of the, whatever it was, the dates of the 18th and 19th, and the reason it was down this week, the 22nd and 23rd, was because of whether it will get passed or won't get passed. We got 2 huge different ways. If we have been in a deflationary environment for the last several months.
You think so?
Yeah, when you've got your biggest asset that most Americans own, which is their home, and their second biggest asset, which most Americans own, which is their 401k, and they've been dropping in terms of value from anywhere from 10 to 20%, you know, we're in a situation where that's deflationary in nature. And if we have to print all this money to bail them out, that'll help our home prices, it'll help our 401ks, but it's inflationary, and if we switch, that's going to be...
We got to go, Jerry. So we're going to come back on this deflationary topic in just a minute, because this has gotten me all wound up. I'm Chip Hanlon, president of Delta Global Advisors, with friend, exclusive commentator, and head of YourMoneyTalks.com,
Yeah.
Jerry Slusiewicz.
Thanks for having me, Chip.